Your trusted connectivity partner, Telkom Business, proudly brings you the Entrepreneurial SME Show.
Welcome to the Entrepreneurial SME. I am Mabote. This week we revisit the topic of SME funding with my expert guests, Refilwe Madigage, Senior Channel Specialist for Financial Services at Telkom, and Mandla Khupe, General Manager for Commercial and Business Development at Retail Capital SA. This time around, however, we are going to zone into scalable business owners and look at what triggered their growth and what makes them fundable. Good evening, Refilwe, and good evening to you, Mandla. And I'm going to start with you, Mandla. Now, the last time we had a conversation with Chad Tessendorf, there was an expectation of interest rates being cut in the September-November period, and that has come to fruition. What does that mean for SMEs?
I think we are in a very good environment. We are starting to see, at least for us, what off the back of the cut, our business confidence is certainly there. We are writing more deals. We are having record months now. And also what's great about it is we know it's going to boost our consumer spending, right? And that consumer spending is likely going to be directed to small businesses, right? Which is exactly what we want. And I guess what sort of like the overarching thing with all of this is that electricity supply is back, the stability of the electricity supply, which obviously does help our small businesses to stay trading and to continue servicing their customers.
Typically, Mandla, and it's a very broad question, but I'm going to ask you to be as brief as you can. What makes an SME fundable?
So the business that the businesses that we fund particularly are businesses that have that are post revenue, right? So we need them to be post revenue. We fund our businesses as young as 6 months, and what we want on our side is we want businesses that have a good credit record. We want businesses that have a diversified income stream. So by that, we mean businesses that do not only service one client. So the more clients they have, the better it is for us. And also what we as an alternative lender do is we also have, we've built our credit scoring models using alternative data. And for as long as a business has a digital footprint that we can leverage, a digital footprint that we can analyze, then they will be fundable. So we have really sort of reduced or at least relaxed the criteria that your conventional funders actually look at. So we've really made funding access simple. So in partnership with Telkom, that's exactly what we're achieving.
Refilwe, historically, people went to financial services company, banks, right, to go get funding. Now you're into this game, and I'd like to know, when did you get into this game and what were you answering? What is it that other people are not, the conventional guys are not offering that you guys are offering?
Okay, so within Telkom, I mean, historically we've been known for data, for internet, and for telephones, really. So I joined the financial services team with around 2021. And that's when we started with Fundable insurance, device insurance, and then moved on over to our digital wallet and Telkom Land. And basically, it's to just address the gap in the market and to be able to be a fintech-based company, to be able to address the gap that is there in the market and be able to cater for our customers and be a one-stop shop.
When you say gap, are the guys we're talking about that you fund too small for the big financial services providers, or where's the gap?
So it's very, very diversified with the clients that we have, right? So the clients that we have smaller end businesses and high end businesses. But I think in the interview that we did, or the case study that we did on our clients, and I think the responses that we got was the turnaround time, and obviously that we don't require collateral, and obviously that we are able to do reimbursements.
Well, let's get to the real stuff, right? There are three case studies that we looked into. There's one, in the cooling and refrigeration space, and they've come back to you about 5 times. Now, I'd like to know first, what were they looking for, and what is this coming back 5 times? Is it that they were rejected, or how does it work?
So when you apply for funding, and it doesn't have to wait until you make the full payment of the initial loan that you requested. So in the middle of your loan period, you can be able to request for more funding. And that's how...
So like a revolving loan?
Like a revolving loan, yes.
Wow. Entry to how little can I come in at, and how far can I go in?
As little as 20,000, requesting funding for 20,000 and up to 5 million.
Mandla.
Rems, can I just...
Yes, please come in, yes.
Just add to what Refilwe is saying. So what's important with the case studies that we've looked at, and which is very common in our business, is the repeat rate, right? Where we've got businesses coming to us at the very least between 3 to 4 times to repeat, right? But what's always interesting when we look at our stats is the growth in those businesses, right? Where someone comes in, maybe their first advance with us is less than 50,000 Rand. And then we look at them again in 2 years when they're still in the book. Now they are taking 300,000 from us. So I think that's a very important metric, just talking to this partnership that we have and the impact that we are having with these businesses, to see that growth in the businesses, to see the sustainability in that they become bigger and can actually afford to get more funding from us.
In my business, Mandla, they call you an interviewer's dream when you can answer the question before I ask it. We're going to take a short break. When we come back, we continue this conversation.